The question on everybody's mind is whether or not the recent price action was a bear trap or a bear market, beginning of a bear market. We'll try to ascertain what's happening. Junk debt doesn't look that bad right now, and this is another reason why there is a possibility that we're not yet in a bear market for stocks. Gold breaks to new records as dollar collapses. Newmont trade, we'll discuss the trade of Newmont mining, and we'll finish off with oil as it breached key support and could collapse to as low as $40 a barrel. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, April 11th, 2025. As always, please hit the like button, subscribe to the channel, share this video, and ask any questions you like in the comments. If you are a subscriber, stay tuned. We'll be covering various securities, for example, market breadth, Bitcoin, some of the currencies will be covered in the members only section, some of the foreign ETFs that we don't normally even look at, for example, Argentina and Austria, some of the large cap stocks that look promising despite the recent price action, and some of the speculative securities, and especially the gold and silver related ones, so stay tuned. We're currently looking at S&P 500 on the daily time frame, so each candlestick is a day's worth of activity. I'm using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart, this green, blue, red, and yellow lines. You can find out more about them by going in the link in the description. So the reason why I question this entire premise that we're now in a bear market is because of the way this steepness of this collapse. Technically speaking, when we close below the yellow line, as we did on April 4th of this year, it implies we're in a bear market. But notice that almost immediately we got this hammer-like candlestick on the 7th of April, and then we basically rallied, and then a big candle right there on the 9th of April, and then today actually there was a pretty good candlestick as well. I mean, we closed above the red line. So the new bull market is not that far off. New bull market for S&P 500 is only a few percentage points away. We are only 5% away from a new bull market. So yes, technically speaking, we did collapse, and we had a technically again entry into a new bear market. But just the way this happened makes me wonder if this is not a bear market, but rather a bear trap. So what's a bear trap? A bear trap happens when there are bearish indications. So in other words, that stocks are they seem that they're going to collapse and continue lower, but all of a sudden they turn around and we get this gigantic candle, as for example here on the 9th of April, and those people who actually went ahead and shorted here, well, they are out of luck. So this is what's called a bear trap. I can show you another one very similar to this setup, and it occurred during the pandemic. So the pandemic was technically declared on March 13th, right there where I'm hovering, March 13th, 2020. By then, stocks have indeed closed into a new bear market on the 9th of March, 2020. And actually, we did continue a little bit lower, so theoretically speaking, if you shorted here, you could have made some money. But notice how short-lived this whole thing was. It was barely, let me just see how long the whole bear market lasted. It lasted 36 trading days or 51 days. So it lasted between March 9th, 2020 and April 29th, 2020. How do I know? When we close below the yellow line, that's the bear market. When we close above the blue line, it's the bull market. So now, just based on this, for example, and notice we actually went deeper, below the yellow line than we are currently. So notice we went below the yellow line just a little bit, and then we immediately sprang back up, and we were actually very close to new bull market, as I just said, 5% away. It's not that far. So we can look at 4-hour charts to see what's it like, what the price action is like on the 4-hour charts. For this, I'm using a continuous security, and I'm using ticker symbol US 500 from Capital.com versus this security, which is just SPX from S&P 500. So two different securities. You can also look at 4-hour charts, but you notice that for this security, 4-hour chart looks somewhat different. Notice how big this gap is right here, and actually this gap is barely there. So we want to use continuous security. So on this chart, on 4-hour chart of S&P 500, we can see a clear drop into a bear market that began as early as 27th of February. You had several opportunities to sell short, very successful. Now we are again rising. So again, if we assume that we're in a bear market, technically speaking, we should have shorted right there on the 10th of April, yesterday. However, today we're already above the red line, and we're approaching this area of partially filled gap between the second from Wednesday, April 2nd. And so this partially filled gap, if it gets filled, gets us super close to a new bull market. A new bull market would be at 5655. So somewhere, this is the gap that I'm referring to, and literally like a percentage point above is a new bull market. So this is a reason why I am kind of reluctant to declare a new bear market right now, and I just want to see where we actually end up. So on the 4-hour chart, again, I think the rally will continue, most likely into next week, and this gap around 55.40, 55.12 or so most likely will get filled, and if it continues higher, we're going to be back in the bull market. High yield bonds, junk debt. The reason why I give a damn about junk debt is because high yield bonds correlate highly with S&P 500. So on this chart, you can see the yellow correlation coefficient down below here, and it usually spends its time in the positive territory. So that means that high yield bonds and S&P 500 do the same thing. They correlate well. So high yield bonds, whereas S&P collapsed into a quote-unquote new bear market, high yield bonds actually barely budged, and they are still around the blue line. Now, I had a question from a subscriber, and you can see down below here it says ADJ. That means this data, this high yield bonds data, is adjusted for dividends. In other words, because high yield bonds, they're by definition high yield, they give a lot of money as a coupon. We want to consider it as a total income. So this is basically total income fund, and we can uncheck it right there where I'm hovering, and you can see the picture will be completely different. Without the dividends, yes, we're definitely in the bear market. With the dividends or coupons, I think we're still, technically speaking, in the bull market. So this is the reason why I'm not like that freaked out yet about the general state of being, especially in the stock market. Dollar, on the other hand, really had a great fall. I thought we're going to be bottoming here, and in fact, I'm going to show you the reason why I was saying that. So there it is on the 3rd of April, on the 4th of April, and again on the 9th of April. The price action tried to get, stopped right around the yellow line. However, on the 10th of April, Thursday, it actually broke below, and today it continued lower. So right now we're seeing dollar collapse to new lows that we haven't seen since, well, we're below July 2023 lows, and this general pattern, I'm gonna try to draw it out. Sort of like a lot of inverted, kind of like that, cups. This is a very bearish, quite bearish pattern, and we can estimate how low it will go after this break that did just occur. Well, we didn't close below the July 2023 levels yet, but we didn't make a new low. So I am fairly certain where we've broken the support. But let's just be very, you know, not terribly aggressive and think about this amount between the low from December 2023, high to April 2024, and again another low on September 2024. So this depth of this pattern is around 6%. So what we can see is if that same pattern gets duplicated on the downside, that means we're going to hit sometime in the future, not exactly know when, we might hit the levels not seen since July 2021, which is another 7% down from today's level for the dollar. Of course, dollar is inversely related to a degree, inversely related to gold, because it is gold divided by US dollar, and the bottom part of this equation, US dollar, just got smaller. So gold by extension went up. We just made a new all-time high at 32.45. So $3,245 per troy ounce, which is, pretty big number, implying that you can, think about various ways. I mean, weak dollar means that most likely the inflation will be higher. Will it actually be higher is a different story, but the expectation is that yes, the inflation will be higher. If you were trading gold with us, then you are in just excellent, awesome shape. Notice this moves, notice this previous alerts about around the blue line, and basically you got new all-time highs. So if you did buy even the last opportunity, you're up 60% or so. So it looks like the expectations are that for whatever reason the inflation will be increasing. Perhaps it's a safe haven kind of move to safe haven asset. For example, gold is a safe haven asset, but also it could be an inflation hedge. Although technically speaking, over the longer term, the stocks are a better inflation hedge. But nevertheless, if you did open recently, in actually last year, February of last year was the last opportunity to buy gold, then you're up 61%. However, if you didn't get to open recent, gold back then you could have very easily traded gold miners, and we are indeed trading gold miners. For example, let me see, GDX. So GDX gold miners, for example, last opportunity. Well, there was another opportunity a few days ago on 7th of April, but let's just say you took the one from 22nd of January, and you are up 34%. So definitely gold miners are moving quite fast compared to gold itself. Recent trade, Newmont mining, I actually bought myself on February 20th. I still have the position open. Recent opportunity to buy again was on 10th of April, yesterday. Today it gapped up over 7% and reached our target. Now at this point we can move our stop to entry and possibly take profits. So this is what the essence of our trading is. Then we buy on close above the blue line. Once the target is reached, we move our stop to entry and enjoy the ride. So Newmont mining, if you just recently bought it, congratulations. Finally, I want to wrap up with oil, light crude oil futures, ticker symbol CL1 exclamation point. So we broke support around, below the $65 area. We broke it on April 4th, and then we actually made a low as like $55 or so. So definitely support was broken, and this support actually went back for a very long time. Let me show it to you. So I'm just gonna turn off my indicators for a little while. Okay, so I'm looking at this support from the lows in August 21, in December 21, again lows in May 2023, and some of the recent lows as well. It was sort of an area between 65 and like $61 or $63 to $71 area. And on this weekly chart we can see this clear breakdown on last week's candlestick. It was a red candlestick closing below the recent low, well, the recent lows, and actually even lows from going all the way back to November 2021. So as I just showed with gold, we can kind of see it, this type of pattern, which is an upside down sort of cups or whatever you want to call them, and then if we break below that level, then most likely the same amount would be duplicated on the downside. So very terrible prediction is around $30 per barrel, but very reasonable prediction is around $40 per barrel. So still we have some way to fall for oil, and some of the producers of oil, such as Russia, could be in serious trouble. And perhaps this is the reason President Trump is doing this whole thing, is to pressure Russia into finally agreeing to a ceasefire. What do you guys think? Do you have any ideas, opportunities? Make a comment below. I would love to hear from you. Also make a comment if you're just checking in. Like this video. Stay tuned on how to find me on the internet. Other than that, thank you for watching and have another great trading week. Bye-bye. So go to MasterChartsTrading.com, click on sign up for one of the products. Again, I have 2 products in one bundle, and hopefully we'll have a 3rd product pretty soon. Right now we have the trading indicators, so these lines in the chart, they're available for TradingView.com. You need a free TradingView account. You don't need a paid TradingView account. Go to TradingView.com, open a free TradingView.com account, come to Master Charts Trading, sign up for my indicators. I will open the door for you on TradingView. So then you can trade pretty much anything under the sun on pretty much any time frame. If you just want the newsletters, I send out daily alerts as well as weekly members only videos. For example, this week we'll be covering quite a bit of various securities that I already mentioned. And I also send out, I send out daily alerts, and you have also the access to the members only training area for the various training videos. And of course, if you want to get the best deal, get both trading indicators and newsletters at $49.95 per month equivalent. If you buy yearly subscription, is a great deal. And of course, you can get also monthly subscriptions at $59.95 per month. For indicators and newsletters, or less if you're interested in just indicators or newsletters separately. And again, I wanted to mention that we might have a 3rd product pretty soon. Well, this is a bundle, so technically speaking there will be another 3rd product, which would be stock ratings and things like buy, hold, or sell ratings on thousands of stocks. Hopefully that will be coming sometime in the not so distant future. We're working on it. Other than that, again, thank you for watching and have another great trading week. Bye bye.